Aloha and welcome to Java. Thank you kindly for joining me again. This is for Thursday. It's May 2nd, 2024. Yesterday was quite a big day in the markets. We'll talk about that in a minute. But the most significant event probably today after hours is Apple reporting. So let's see what else is going on. We're still clearly in extreme risk territory on the MMRI, our favorite risk indicator, although it's come down quite a bit. So what happened with yesterday is that the Dow surged over 500 points, but then it dropped again after the Fed spoke, basically saying that their next move would be a rate cut, very likely would not be a hike. So since they said the market would not be a hike, everybody got bullish, bought in really quickly. First move was wrong as normal. So we've still got some fear on our fear greed index. We're at 35 level with that. So watching the US 10-year yield as always, along with the relative strength of the dollar, both of those pulled back yesterday. So it did leave breathing room in the market for it to recover after that drop. So as you can see currently, as the stocks were reading, the Dow is up and the others were down, but just slightly at the end of the day. So we've got oil is recovering a bit on some news regarding the United States Strategic Oil Reserve. And we've got the futures looking green at the moment. So overall sentiment is that it's bullish this morning, at least to open, but it's very weak volume. So after that fear of the hike dropped, still wavering. They're watching more the job numbers report, but that's going to come out on Friday tomorrow morning. So today, really watch the volume because as this says, lower volume is higher volatility. So less people trading means those prices can swing much more rapidly. So watch not just price levels, but also that volume behind it. So with that calendar today in the earnings, we are watching initial jobless claims will come in prior to the market open, getting labor cost factory orders, and then really on watch tomorrow will be that employment report and then also the wages. After hours, getting Fed speakers, Austin Goolsbee and Williams, I don't know that they're going to have much of an effect because by the time the weekend pulls through, basically people forget about whatever effect that was and kind of digest it. So we'll see how market does as far as that. I do urge caution going into this weekend. There's quite a few flags, not just in the technical charts, but also elsewhere that just a little caution going into this weekend. I'll go over maybe more of that tomorrow. So today we're looking at earnings. Two of the larger ones, of course, Apple, and then also Coinbase. We've got Cloudflare, it's another one that's been kind of up and coming. We've got some health ones, Moderna, and then we're looking Friday prior to market open, which is why I put them here. If you're trading any of those, a lot of people looking at Hershey. So in the banks, this is basically what happened. Powell keeping the rate cuts on the table, but not saying when. So definitely not this time. Kind of pushed it back towards November is what the sentiment now is. We've been talking about this for a while, that it couldn't be. And then also that we have to look at basically other Western banks will have to work in concert. So until they start talking about cuts and doing it at the same time, because otherwise it would have an effect on the currency, similar to what we're seeing with the Bank of Japan. Now they are the fly in the ointment, if you will. Their accounts were basically showing that they did have another intervention. Right after Jerome Powell spoke, there was major movement, and that's basically, they're not admitting it, but they did step in to intervene in their, you're watching basically a currency dying. So they're trying to prop it up at pretty big costs here. There was discussion with Yellen not too long ago, and They always talk about these things behind closed doors. Now we can see very clearly they are doing deals, and this is the result. So, anyway, we've got something else that's kind of scary in the works, and that is US quarterly debt sales steady. Basically, going to start buying on the surface. They've kind of been doing this in the backdrop, but even more treasury buybacks. It's buying back your own debt. They print their own money, and that always ends kind of disastrously. So, looking a little closer at the bank first is the garbage that's feeding us. The world economy looks to dodge stagflation as the outlook perks up. So, maybe it perked up from being awful, but we're not going to avoid this stagflation. So it's fueling a lot of this. The reason I say that, I've got a list of the 15 most recent bank failures. There is a link in the description if you're interested in seeing which ones those are. One of which, NYCB. So this was the one that was purchased by the recent Treasury Secretary, and this is kind of a really good example. So what they're detailing out is how they're going to pull this bank out. So basically selling non-core assets, diversifying its commercial loan book. So they were exposed to commercial loan failures, and they're looking to look through their credit, quote unquote, credit related challenges, okay, in the large real estate portfolio. So they're restructuring this. They picked this up for pennies on the dollar, and now they're looking at pulling in all of these assets, basically. So this is how real wealth is transferred. So we'll look at their target there also in that list. So what have we got going along with this? Buyouts of delinquent commercial real estate, CLO loans, jumping 210%. Multifamily is the one that is looking like it's really taking the brunt of this here. So these banks are restructuring these loans. Uh, it's still got major amounts of headwinds. We're watching consumer debt, credit debt, all building up. This commercial debt is on the backs of these banks. So saying that the economy is going to dodge this stagflation is just near impossible. So I'm not believing that. So let's go into what's going on, the underlying, the real economy, as I like to say. So the first story is Maersk. They're seeing improved prospects for global container trade. Normally, this would look like a really good prospect, but I think they're wrong. And I'll tell you why. The impact from the Red Sea conflict will last through most of 2024. I agree with that. Now, they're raising their lower end of the profit forecast range. And I disagree with that because they have not counted in the lowering demand, which I think they're going to see. So shipping, always watching that, but mostly because that tells the real demand and production story. So we'll watch how that goes. But as far as jobs, this is what's going on. We've got United States job openings hit a 3-year low, showing a cooling labor market. We're only seeing the beginning of this. The watching vacancies versus the quit rate. But we've got major companies here. We've got Microsoft, $2.2 billion invested in Malaysia. So they are education training 200,000 people. So that's 200,000 Americans not going to have a job with Microsoft. We've got Stellantis. They're hiring engineers in Brazil and India in order to save money because all of these pushes for union and more pay, they have to cut their costs. We've got Google laying off 200 workers. Now, in the long run, that's not a large amount, but they've been doing this more frequently. This is just the latest bout. So shifting their jobs to Mexico and India and the latest restructuring. So as I said, huge companies, and this is only the beginning. So these are only the ones in the stories we're seeing because they're large companies. So I expect this to continue as we've been talking about, and especially if you're new here, I expect employment rate, the real employment rate, will have to approach more like 30% before they're talking about rate cuts. So I'm expecting for the United States probably 25 to 27%, and our Western partners, sorry to say the UK, probably closer to 28% in unemployment. So on with wars and trade, we've got the US nearing completion of the floating pier that they had said they're going to build to get Gaza aid in. That's also a mobilization method. So could become dual purpose here really quickly. We've got Ukraine is accusing the United States of insufficient support. And this man is absolutely delusional, just saying that it can't expect to defeat someone as stronger than Russia when it fails to properly arm Kiev. So basically, they're putting this on the backs of the United States and the West to arm them enough to defeat Russia. Not going to happen. So European Union must decide the fate of military-age Ukrainian men. They are running out of people. So they suspended consular services, meaning that any Ukrainian men that have left the country must go back into the country in order to renew their passports. And when they do, they are conscripting them by force, meaning they're literally kidnapping them off the streets now. So expect this. We've got the United States now slamming Russia for alleged chemical weapons. Now, this is another load of garbage. They're setting this up. The chemical weapons they're talking about is tear gas. We're using that on our demonstrators and the protesters in the United States. So if we're going to slam Russia for using it in war, should look at home first. But this all pushing towards getting troops from Western nations to go to Ukraine to fight for them. And I want to know how you feel about that. So with that, I'd like to change this and lighten up. My plant for the day is oregano. So this is super easy to grow, but it's in the mint family. And as I had one viewer point out, and thank you very kindly for that, it's in the mint family. Mint family plants grow like weeds, literally. So you have to keep them in separate pots or they will overtake everything else. But we've got some really good health benefits with oregano. Treats common cold viruses. It cuts back on their growth and development, can help with congestion. Plus, it's just really tasty. So it's got some of these other benefits as well. If you'd like to start with growing plants, I recommend just getting a start, a small one from, your local nursery, garden spot, large box store. They've got them also. Or just a plug, as long as you've got some good roots, if you've got a neighbor that grows it. It's really good to have around. So with that, I wish you all a wonderful day. Thank you all kindly for being here. And until I see you again, my friends, of course, stay free.